On February 1st, 2025, Moe uploaded a video titled Warning XRP XCN Holders, Trump Tariff Changes Everything. You guys can see it's right over here to the left, right here on this particular YouTube search engine. You guys can see it's about a year ago. Now at the time, XRP was price closed at $2.87, while XCN or Onyx coin traded at about 3 pennies. Now, so did these tokens survive the terror drama, outperform the market, and reward its holders? Or did a portfolio become a decentralized archaeological site? Today, we're going to check those receipts. Now, before I do, I want you all to notice in this search, you guys can see that somebody else completely copied the thumbnail of what Moe created a year ago. Title and everything. So maybe Moe want to follow up on this particular YouTube channel to see if they're actually copying or stealing his content from a year ago. But let's get back to what I'm doing the video for. The video was published by Moe on February 1st, 2025 and predominantly featured XRP and Onyx coin with the ticker symbol XCN. Moe maintained a bullish stance on XRP in this video, highlighting that it is currently in a healthy consolidation phase. He mentioned the potential for an upcoming spot ETF and the impact of a possible SEC settlement as key catalysts for future price appreciation. Now, when you look at the technical analysis that he mentioned, you guys can tell that he was closely watching the $2.90 support level. And if it held, he would expect a potential breakout above $3.30 in the next coming weeks. You guys can see that it actually panned out for this particular video when it was posted on February 1st. You guys can see that XRP ultimately came to 350 a couple of weeks later, or a couple of months later. Now for Onyx coin, he was looking for, let me show you all that particular chart. He was looking for a swing trade, specifically waiting for price action between the 13 EMA and the 50 EMA to enter in. He maintained an optimistic outlook for these cryptocurrencies if tensions are resolved, and then the markets could see significant growth. He mentioned that he deleveraged his traditional equity holdings, i.e. stocks, to increase his crypto exposure in anticipation of future growth. So he went ahead and sold some of his stocks in order to grab up more crypto, and apparently looked like it was going to be XRP, because this is what the video was talking about in summary, for this crypto to increase in value. Now, apparently, changes everything is easier to measure in capital letters than in portfolio returns. Like I said, XRP closing price on February 1st was $2.87. The latest available market price used for this review was approximately $1.05. That equals a return of approximately, get this, negative 63.1%. So if you would invested $1,000 on the closing price when he uploaded this video, that $1,000 would now be worth $368.99. So about $631 disappeared from your $1,000 investment. Not disappeared in the legal sense, of course. It simply achieved blockchain finality in somebody else's account. But did XRP ever recover? You guys can see right here from the chart, it did, because XRP did not immediately march straight into the basement. During 2025, it later traded as high as $3.65, meaning that it rose about 27% above the February 1st starting price. That's an increase of 27.2%. So therefore, an investor had an opportunity to exit with a respectable gain. But that's the problem. Did they exit? Or are they long-term holders like Moe is? XRP also benefited from a major regulatory developments. In March 2025, Ripple's chief executive said that the SEC was dropping its appeal against the company, and XRP jumped following the announcement. So the XRP thesis was not completely imaginary. Regulatory optimism generally helped push the token higher. The problem was holding through the entire round trip. XRP briefly delivered a winning trade, no doubt about it. But then it transformed into a 63 unrealized loss for anyone that is still holding today. That is less diamond hands and more watching your profit evaporate, because selling apparently violates the crypto constitution. You're not supposed to sell. You're supposed to diamond hands. Now, we arrived to Onyx Coin. Okay. Its February 1st price was around 3 pennies, like I told you. The latest available market price used for this particular review, it was approximately 0.00382774. Not even a penny. That equates to around 87.1% loss. You're down 87.1%. If you would have taken that investment or bought Onyx Coin on February 1st at its closing price. So if you would have invested $1,000 into this coin, that $1,000 would now be worth $129.27. Yes. So that's a loss of roughly $870.73. Onyx Coin did not merely underperform. It took the original investment, removed almost 9/10 of it, and returned the remaining balance in a tiny envelope marked community governance. For context, Onyx Coin remains the native token of the Onyx blockchain ecosystem, but continued project activity does not automatically equal positive token returns, an important distinction that crypto marketing departments occasionally misplace. So let's say someone placed $1,000 in XRP and $1,000 in Onyx Coin on February 1st, 2025. The XRP position would be worth approximately $368.99. The XCN price would be worth approximately, or position would be worth approximately $129.27. The original $2,000 portfolio would therefore be worth about $498.26. Yes, this video right here. Your portfolio of $2,000 would now be worth $498.26. That's a total loss of $1,501.74. That is a loss of about 75%. So an equally weighted portfolio lost approximately 75%. The good news is that taxes on the gains should be extremely manageable. Now, because crypto trades every day while the stock market was closed on February 1st, we will use the S&P 500 previous trading day close from January 31st, 2025. The S&P 500 closed at 6,040 points on that day. Using a recent index level of approximately 7533, the S&P gained about 24% since then. So the S&P 500 is positive 24%, XRP is negative 63%, and Onyx Coin is negative 87%. XRP underperformed the S&P 500 by approximately 87.8%. XCN underperformed the S&P 500 by approximately 111%. Combining them, the portfolio underperformed by approximately 99 or almost 100%. A $2,000 investment split between the two tokens became roughly $500. That same $2,000, if you would have put it into the S&P 500, would have grown to approximately $2,494. The difference, almost $2,000. That is not a tracking error. That is the benchmarks leaving the crypto portfolio on red. Now, StockMo was correct that tariffs and political policy could create significant volatility. The timing of the video was also relevant. Markets were reacting to the White House announcement of new tariffs on Canada, Mexico, and China, with the S&P 500 falling on the 31st of January as investors consider inflation and trade risks. XRP also subsequently rallied and reached prices above the February publication level. Therefore, someone treating this video as a shorter-term trading alert could have made money. That at least deserves some credit. But what went wrong? The central problem was not necessarily the initial attention given to XRP and XCN. It was the absence of a visible, measurable exit strategy. No target price, no stop loss, no declared time horizon, no clear distinction between a temporary trade and a long-term investment. We just know that he's in it for the long term. Very, very broad. Now, XRP eventually gave back its post-publication gains and now sits far below its starting price. Honest Coin suffered approximately 87% collapse. A warning about volatility without a risk management plan is like shouting, "There may be turbulence," after removing the airplane's seatbelt. The verdict? XRP was bad recommendation when that video was posted. XRP briefly moved above 27%, which we give him credit for allowing that to happen. So this was not an immediate failure. Traders had a chance to make a profitable exit opportunity. They had it. But measured today, a 63% loss and dramatic underperformance versus the S&P 500 earned this recommendation a grade of bad. Now let's get to Honest Coin. An approximately 87% loss with no stated target or risk level earns Honest Coin the official grade of financial jump scare. Terrible. The equal weight portfolio lost about 75% while the S&P 500 gained about 25%. The headline said tariffs changed everything. For this portfolio, they apparently changed dollars into character development. The fairest conclusion is that StockMo highlighted a real macroeconomic risk, and XRP subsequently offered a profitable trading window, but that window is now closed. But without a documented target, time horizon exit plan, holders were left exposed to enormous downside, and Honest Coin performance was catastrophic. Now remember, this video is for education and entertainment purposes only. Crypto prices are extremely volatile, and historical returns do not predict future results. And none of this is personalized financial advice. Always verify the original source, establish your own risk limits, and never let a thumbnail make your retirement decisions.